Welcome to this explainer. Okay, right now, as we speak, there is a silent paperwork glitch that is quietly siphoning billions of dollars from ordinary brokerage accounts. It's an issue that hides right in plain sight, just buried in the documents you get every single year. So, you gotta ask yourself, is a missing number draining your savings? I know, it sounds almost too simple to be a real threat, right? But imagine finding out that a simple bureaucratic oversight... Okay, let's dive into this. Section 1, the silent paperwork glitch, uncovering the ghost basis. So what are we actually dealing with? Our source material points to something called the ghost basis. Basically, this is a super common paperwork glitch where your original purchase price, what the finance world calls your cost basis, just vanishes from your tax forms. And because that number is missing, well, the system defaults to the worst possible scenario. It literally assumes you bought the stock for exactly $0. It's kind of like buying a house for $500,000, losing the receipt, and then having the city tax you as if you were just handed the property for free. Based on the documentation we're reviewing, this isn't some complex offshore loophole for billionaires. Actually, it's the single most common way the everyday investor accidentally overpays the IRS. It's literally just missing information, but man, the financial consequences are staggering. To get a clear picture of the landscape here, we're turning to our source, Brian. He's a CPA from the channel Hidden Tax. Now, he approaches this issue with a pretty stark, unfiltered perspective. His view is that we're dealing with a certain level of what he calls economic theater. He points out that, hey, with $39 trillion in debt, the government simply isn't going to fix their reporting mistakes for you. Whether you agree with his broader economic assessment or not, Brian's practical takeaway is a massive wake-up call. If you're managing your own investments, you have got to hunt down the math yourself if you want to survive this glitch. You really can't sit back and expect an automated system to auto-correct this in your favor. The system is perfectly happy to just let you overpay. Now, what's really interesting about this slide is Section 2, the $0 trap, the math behind the glitch. So you really need to beware the 1099-B empty box. When you get your brokerage statements right before tax season, you can't just blindly upload them to your tax software and hit submit. No way. According to the Cost Basis Crusade tutorial, you have to actively hunt for this dangerous, literal empty box where your original purchase price should be. You might be wondering, why is it empty in the first place? Well, the tutorial points out that this glitch often happens during totally normal financial moves. Maybe you transferred your accounts from one brokerage to another, or perhaps you inherited assets from a family member, or maybe a stock you hold just went through a complex merger. In those handoffs, the original purchase price data often just drops away. The broker doesn't have it, so they just leave the box blank. And boom, they pass the problem directly to you. There is a massive disconnect happening here between real life and tax bureaucracy. I mean, in reality, you obviously bought that stock for a set price. Maybe it was $50, maybe it was $500, but the IRS's default assumption when they process your paperwork and hit that blank space is that the asset was acquired for absolutely $0. The system essentially assumes the stock just materialized into your account via pure magic. They treat it as if a wizard just waved a wand and poof, free stocks appeared in your portfolio ready to be fully taxed the second you sell them. Let's apply Brian's real-world example to really cement how damaging this is. Okay, imagine you finally decide to sell a stock, and you sell it for $100. In a normal world, if you initially bought that stock for $90, you're only taxed on the $10 of actual profit you made, right? That makes total sense. That's how it's supposed to work. But with the ghost basis, because that cost basis box was left completely empty during, say, a brokerage transfer, the IRS looks at that transaction and assumes your buy price was $0. The result? They tax the full $100. So the crucial point is, this means you're suddenly paying taxes on 100% of that money. You aren't just paying capital gains on your profit. This glitch is causing everyday investors to pay a hefty tax on the principal cash they already owned. It's crazy. The money you worked for, paid income tax on, and then diligently invested is being taxed a second time, entirely by accident, just because a tiny piece of digital data fell through the cracks between financial institutions. Let's move to and see how this builds. Section 3, defeating the hidden siphon, fortifying your finances. Alright, so how do we actually fix this? Well, the source tutorial lays out a super clear, proactive 3-step strategy to make sure this doesn't happen to you. Step 1, check your 1099-B specifically for those empty boxes before handing anything to an accountant or dumping it into your tax software. You are your own first line of defense. Step 2, hunt down your original buy price. Now this might mean digging through old trade confirmations in your email, pulling up old bank statements, or even having to call your previous broker to get that historical data. And finally, step 3, manually correct the basis to protect your money. You are absolutely allowed to fill in the correct number and provide the documentation. You've got to intervene and break this paperwork cycle before you hit file. Your ultimate goal here is simple, yet absolutely crucial. You want to avoid paying for bureaucratic mistakes and bad data handoffs. You want to keep your hard-earned money exactly where it belongs, in your hands, working for your future. As Brian the CPA puts it, you are protecting your financial fortress. His big call to action for his viewers, and really for anyone learning about this today, is to stay educated and proactive so you can stay ahead of this siphon and other hidden pitfalls just like it. You absolutely must take the reins here because the defaults are for sure not set up to protect your wealth. Which brings us to our final lingering thought for this explainer. If you don't hunt down the math, who will? The harsh reality is that the ghost basis relies entirely on complacency. It feeds on the fact that most of us just want to get our taxes done as fast as possible without asking questions. But remember, no one at the brokerage or the government is going to double check this for you, so stay vigilant, double check that paperwork, and ensure you're not paying a massive hidden tax on your very own money. Thanks so much for joining me for this explainer, and I'll see you next time.